Financial Management Group 6.
Hello everyone, we are from Group 6. Group 6 has 7 members. Our group represents about the company Grand Hoover Berhad and Meridian Berhad. They are group from member which is No Akilah Auni binti Abdullah, No Farah Isati binti Mokhtar, Rabiatu Adewiyah binti Muhammad Yusuf, Fatin No Hidayah binti Tabrian, No Manihah Afifah binti Nurul Iman, Muhammad Helmi bin Salani, and my name is Yakchen Lim, number matric H21A3124. This is part introduction my company, and thank you.
Assalamualaikum. My name is Nur Farizati binti Mohtar. I will explain about introduction. Ratio analysis is a common and perhaps essential tool that analysts and investors may use to get a competitive advantage in the stock market. Financial ratios are also frequently employed to forecast a company's future success. Grand Hoover Berhad (GHB) was incorporated in Malaysia on 12 March 1971 as a private limited company under the Companies Act 1965 as Hoover Tilling SGN BHD. On November 30, 1995, the firm changed its name to Grand Hoover SGN BHD and then obtained public company status as Grand Hoover Berhad. On March 19, 2002, Meridian Berhad was listed in the property sector on the main board of Bursa Malaysia Security Berhad. The main activities of Meridian Berhad and its affiliates include investing in and developing real estate, which link activities in real estate investing and building. Meridian BHD invests in property development, construction, property investment, and others are the segments through which it works.
Trend Analysis Grand Hoover Berhad.
Graph of liquidity ratio. Graph 1 shows the liquidity ratio in these 2 years determine a company's ability to cover short-term obligation. Current ratio in 2020 was 1.75, decreased to 1.57 in 2021. Graph 2 shows the quick ratio measure a company's capacity to pay its current liabilities without needing to sell its inventory. Higher ratio reflect the ability to pay its short-term obligation. Quick ratio in 2020 was 1.13, decreased to 0.97 in 2020. Graph 3 shows that net working capital was increased from 18,908,920 to 60,790,448 in 2020, has higher than may not be leveraging current asset with optimal efficiency. Graph 4 shows the total asset turnover used to measure the effectiveness of a company in generating sales. Grand Hoover total asset turnover in 2021 is higher than 2020, which is 0.17 compared to 0.54 in 2020. It is increased around 0.916 from 0.54 to 0.70 in 2 years. High ratio in 2021 reflect the effectiveness of total assets to generate sales. Graph 5 shows the account receivable turnover used to indicate a company's ability in managing credit sale and convert account receivable into cash. The trend of account receivable turnover of Grand Hoover increased in 2021 with 2.57 from 1.87 in 2020. It increased by 0.7 in that year. The higher ratio in 2021 reflects the effectiveness of account receivable to generate sale. Graph 6 shows the average collection period indicate firm problem in collecting debt. The ratio decreased from 192 days in 2020 to 140 days in 2021. The lower ratio in 2021 showed that Grand Hoover faced less problem in collecting debt from clients. Graph 7 shows the function of inventory turnover is to reflect the effectiveness of a company inventory to generate sales. Grand Hoover inventory turnover in 2021 is higher than 2020 with 3.12 in 2020 and 3.50 in 2021. Higher ratio in 2021 reflect the effectiveness of inventory to generate sales. Graph 8 shows the fixed asset turnover ratio of Grand Hoover increased from 1.92 in 2020 to 5.2 in 2021. The higher ratio in 2021 reflects the effectiveness of Grand Hoover management in using their fixed asset to generate sales. Graph 9 shows the Grand Hoover debt ratio in 2020 was 38% and increased to 41% in 2021. The higher ratio in 2021 reflects the higher amount of debt to finance assets. The debt ratio can be referred as financial ratio that play important role in measuring the extent of a company's leverage. Graph 10 shows the debt to equity ratio of Grand Hoover in 2020 is 65% with 75% in 2021. The greater ratio in 2021 reflects that Grand Hoover is facing higher amount of debt. The debt to equity ratio compares a company's total liabilities to its shareholder equity and used to evaluate how much leverage a company is using. Graph 11 shows the higher ratio was in 2020 at 338% than 2021 at 223%. The higher ratio reflects that Grand Hoover can meet loan requirement and lower risk of default. Time interest ratio is a ratio used to measure of a company's ability to meet its debt obligation based on its current income. Graph 12 shows the Grand Hoover return on equity in 2021 is higher than 2020 with 67% in 2020 than 88% in 2020. The ratio increased from 67% to 88% shows that higher ratio indicate higher return to shareholder company around 21%. Graph 13 shows the Grand Hoover return on asset in 2021 is higher than 2020 with 42% in 2020 to 52% in 2021. It increased around 10%. The higher ratio indicates higher return on the firm's investment. Graph 14 shows the gross profit margin Grand Hoover in 2020 and 2021 was not changed, which 18%. In gross profit margin, show higher ratio indicate higher contribution margin. Graph 15 shows the higher operating profit margin of Grand Hoover was in 2020 at 5%, with lower operating in 2021 at 2% only. The decreasing amount of 3% from 5% to 2% showed that lower productivity in Grand Hoover operation. Graph 16 shows net profit margin in 2020 was greater than 2021 with 76% than 73%. There are 3% decrease of the net profit margin from 2020 to 2021. The lower ratio of 73% in 2021 reflect lower increase to shareholder.
Hello, my name is Mama Hilmi bin Salami with a matric number H21A2177. Today, I will present my part, which is 3.2 Comparative Analysis. Comparative analysis happen between two companies, which is Grand Hoover Berhad and Meridian Berhad. In comparative analysis, I will compare between four ratio, which is liquidity ratio, activity ratio, debt ratio, and profitability ratio. Firstly, I will explain about liquidity ratio. Grand Hoover Berhad show a positive value in three liquidity ratio, which is current ratio, quick ratio, and net working capital, more than Meridian Berhad. Next, activity ratio. Activity ratio also show Grand Hoover Berhad show a positive value in 5 activity ratio, which is asset turnover, account receivable turnover, average collection period, inventory turnover, and fixed assets turnover. However, in debt ratio, Meridian Berhad show a positive value in time interest earned more than Grand Hoover, but debt ratio and debt to equity show Grand Hoover Berhad has a positive value. And lastly, I will explain about profitability ratio. Profitability ratio show operating profit margin and net profit margin. Meridian Berhad has a positive value more than Grand Hoover Berhad, but on return on equity, return on asset, and gross profit margins show that Grand Hoover Berhad has a positive value. So I think that's all from my part. Thank you.
My name is Akilauni binti Abdullah. My matric number is H21A2948. Today I would like to explain about the overall analysis about the company we studied. This in-depth analysis make use for information from all the study, profitability ratio, leverage or debt ratio, activity ratio, and liquidity ratio. There is not debt business. Current Hoover Berhad has a greater current ratio than Meridian Berhad, which enable the company to pay its debt. In the corporation analysis, Grand Hoover Berhad is utilized as an example.
Assalamualaikum. My name is Rabiatul Adawiyah binti Muhammad Yusuf, matric number H21A2618. I will continue about the overall analysis. An analysis of the two companies reveals, for instance, Meridian Limited's liquidity ratio is superior to Grand Hoover Limited's, that giving Grand Hoover Berhad a higher company value. Current assets of the business, such as cash, are to blame. Net working capital is the sum of the current assets, including cash and account receivable, inventories of unprocessed goods, and liabilities, including accounts payable. That's all. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Mania Afifah binti Nurul Iman, and for this conclusion, Hoover Berhad and Meridian Berhad, in particular, have intelligent management and publish lucrative annual report. It's revealed that Hoover Berhad has a greater ratio than Meridian Berhad. Hoover has a greater ratio, suggesting that it contributes more to sale revenue. As a result, Hoover Berhad will attract even more investors than Meridian Berhad. As a consequence of the company efficiency in earning profit in whatever scenario, investors will choose to invest more in Hoover Berhad than Meridian Berhad. Okay, that's all for me. Thank you.